Here is a simple fact to kick things off. In 2025, Virginia Beach home prices are up about 2.6% compared to last year. That number comes straight from Redfin's latest housing market report, which shows the median sale price in August at roughly $400,000. Homes are also taking a little longer to sell, averaging about 27 days compared with 24 last year, but demand is still steady. If you live, buy, or sell in Virginia, those three lines can shape your decisions this year. And if you're ready to take action, call or text me at 757-891-1111. Buyers can explore homes at heroeshometeam.com, and sellers can check their value right now at myhomesvalue.com. All my contact info is also in the description below. So let's break this down into 5 big points that matter most. I'll cover prices, speed of sales, inventory, what's driving demand, and finally my forecast for 2026. Let's start with prices, because that's always the headline. According to Redfin's August 2025 market update, Virginia Beach's median sale price landed at about $400,000, which is 2.6% higher than the same time last year. Over on Zillow, the typical home value sits closer to $413,700, up about 1.7% year over year, with the average home going under contract in just 24 days. That's not explosive growth like we saw during the pandemic years, but it's meaningful. It means equity is still building for homeowners, and buyers are walking into a market that's stable rather than overheated. If we zoom out to Hampton Roads, Long & Foster's Market Minute puts the regional median sale price at about $369,000 in August, which is roughly 6% higher than last year. That shows you the pattern is consistent across the region. Whether you're in Virginia Beach, Chesapeake, or another Hampton Roads community, prices are still trending upward, just at a calmer pace. Now let's talk speed. This is where buyers feel the market in real time. Redfin's data shows the average Virginia Beach home is taking 27 days to sell, up just a touch from 24 last year. In Hampton Roads, Long & Foster reports an average of 32 days on market, up a couple of days year over year. In other words, buyers aren't being forced to write an offer on day one in every single case like they were in 2021, but homes are still moving quickly. And the kicker is the sale to list price ratio, which Long & Foster puts at about 99.5%. That means sellers are still getting very close to asking, in some cases over asking, if their home is priced and presented well. Inventory is the heartbeat of this market. So let's look there next. In Virginia Beach City, Long & Foster reported about 795 active listings in August, compared to 890 a year ago. That's actually 11% fewer homes available. Months of supply also dropped from 1.8 down to 1.4. Anything under 3 months is considered a seller's market, so you can see why sellers still have leverage. But if you zoom out to Hampton Roads overall, the picture looks a little different. Regionally, Long & Foster shows about 2.1 months of supply with new listings up more than 30%, and pending contracts also up about 31% compared with last year. So while Virginia Beach itself feels tight, the broader region is seeing more activity, more choice, and strong buyer follow-through. And let me highlight a key checkpoint. In May of this year, REIN-MLS reported that Hampton Roads hit a record median sales price of about $368,000 to $369,000, the highest in history for our area. At the same time, active listings rose nearly 24% compared to the previous year, the largest number of listings in almost 5 years. Think about that. Prices hit a record even as choice expanded. That's not a bubble. That's real demand meeting more supply head-on. Now, what's driving this? The demand story is rooted in lifestyle and stability. Military presence, job centers, and the coastal appeal of Virginia Beach and Hampton Roads continue to attract buyers from across the country. Relocation is a big piece, but so is affordability compared with other coastal metros. A $400,000 home here buys far more than it would in places like California or the Northeast. And buyers today are chasing not just square footage, but charm, neighborhood character, and access to things like schools, parks, and water. The risks are clear too. Mortgage rates remain elevated compared with historic lows. Even if the Fed eases, we're probably living in a mid-6% mortgage world for the foreseeable future. That impacts affordability. especially for first-time buyers. Wages haven't caught up with rising home values, and if that gap grows, demand could cool in some segments. Plus, macroeconomic factors like job growth, inflation, or lending standards always loom in the background. But here's the encouraging data point. Long and Foster shows pending contracts in Hampton Roads up 31% in August, year over year. Buyers are still stepping in when they see value. That's proof this market has backbone. So where do we go from here? My forecast for 2026 is steady, modest growth. I expect prices to rise somewhere in the 2.5 to 4% range overall, with stronger neighborhoods outperforming. Buyer demand should remain steady, especially in markets that combine affordability and charm, or in higher-end pockets that deliver lifestyle perks. Mortgage rates may dip slightly if inflation continues to cool, but I don't see us going back to 3% loans anytime soon. Mid-6% mortgages will likely be the new normal. Inventory should rise further as more homeowners who felt locked in by their old low rate decide life events, jobs, or equity make it time to move. That will make the market feel more balanced. And that balance is good. Buyers will have more leverage, sellers will still make strong returns, and both sides will need solid strategy. For first-time buyers, the opportunity is real. You finally have more time and more options compared to a couple of years ago. But preparation is everything. Get pre-approved, know your comfort payment, and have a clear sense of your must-haves. That way, when the right house hits, you can move with confidence. For sellers, the message is clear. You still have leverage, but you can't take buyers for granted. Condition, marketing, and smart pricing within the band of recent sales matter more than ever. If you get that right, the average 27 days on market shows, you'll get offers quickly, often near full price. Let me circle back to that May record one more time. RAN MLS reported the region's median sales price hit an all-time high, while listings were at their strongest in years. That's your proof. This isn't a crumbling market. It's a resilient one. And as we head into 2026, I expect that resilience to continue. So here's the bottom line. The Virginia Beach and Hampton Roads housing market in 2025 is not the wild ride of the pandemic years. It's calmer, more predictable, but still strong. And that steadiness can be your advantage if you play it right. If you're ready to buy, go to heroeshometeam.com and send me a couple of listings you like. I'll help you sanity check the pricing. If you're ready to sell, visit myhomesvalue.com to get a quick estimate. Then I'll follow up with a true pricing plan based on today's comps. Or just call or text me directly at 757-891-1111. And one last thing, if this update was helpful, hit that like button, subscribe to the channel, and drop a comment below with your biggest question about buying or selling in 2026. I read every comment, and I'll use your questions to shape the next update. I'm Terry Trexler, and this has been your 2025 Virginia Beach and Hampton Roads market update and 2026 forecast. Let's make your next move a smart one.